So, with that, a very warm welcome again to everyone that is still trickling into our November 2024 Spencer webinar series. If you're not familiar with Spencer, we are a nonprofit organization that supports future leaders of this industry. So, that's college students that are pursuing careers within risk management, insurance, and actuarial science. We do have some amazing guest speakers that are here with us today from AXA XL. We have Eric Barnes, who is an underwriting manager, cyber and technology, and based in New York City. And we have Caitlin Alpern, who is a senior underwriter of cyber and technology and is based in Hartford, Connecticut. So thank you both, Eric and Caitlin, for being here with us today. And Caitlin, I will turn it over to you as I am sharing my screen.
Great. Thank you so much. Thank you for having us. We're very excited to be here today and certainly make this interactive. Feel free to ask questions throughout and we'll do our best to pause when we can and get to your question. I'm Caitlin Alpern. I'm a senior underwriter, as Tandika already mentioned. I have been with AXA XL for over 3 years, and I have 8 years of cyber and technology E&O underwriting experience. I handle accounts for companies primarily between 1 billion and 20 billion in revenues. Prior to AXA, I was at Chubb for about 5 years. I have my cyber COPE insurance certification from Carnegie Mellon and also have my RPLU designation. And as already mentioned, I sit outside of Hartford, Connecticut. So I'll turn it over to Eric so he can introduce himself as well.
Hi, everyone. How's it going? I'm Eric Barnes. I'm an underwriting manager on the cyber and tech team here at XL. And I graduated from Temple University's risk management and insurance program. So I don't know if anybody here is from Temple, but I think you're in risk management insurance. You know, Temple has a pretty big program. But I was also fortunate enough to be selected as a Spencer Scholar, which was just so incredible for my life in college and my career. So I'm forever grateful. So started my insurance career in Philadelphia at a middle market regional broker, and then started my underwriting career at Ironshore, which was then bought by Liberty. So underwrote there for 3 years and change, and then I've been with AXA XL for about 6.5 years, and I sit here in New York. I guess we can go to the next slide. I can give a quick just introduction of AXA XL, our company, and our group. So obviously, Caitlin and I both work at AXA XL. We're a global property and casualty insurer, and we've been writing cyber and tech insurance since about 2012 when our group first formed. And now we are a top 3 market for cyber. So as a little overview of our team, we have 20 underwriters across the US and 6 managers. And we also work very closely with our cyber claims team. So our cyber claims team is phenomenal, and they sit right here in the office with us. There's 18 of them, and all of them are previously practicing attorneys, which is pretty awesome. And we like to brag about them a lot because they're just such experts at what they do. They've handled hundreds of breaches, and at the end of the day, claims and claims service is what we're selling. So the fact that our claims team has a 24/7 data breach hotline that they man, they monitor this late nights, on the weekends. If an insured calls in with any sort of claim or event, they're always going to get a response from them within an hour, which is just something that we also like to brag about. Next slide, please.
So this slide is from 2023, so it's a little bit outdated, but it shows the top cyber insurance carriers. And you'll see in 2023, we were listed as number 2. I think we may have dropped to number 3 for this year, but the size of our book has also grown. So we have over 500 million in direct written premium. Cyber insurance is a very competitive place to be in. We have over 200 cyber insurance carriers. A lot of them do provide excess only and not primary. We're a big primary insurance carrier, and our book is split pretty much 50-50 right now, where we're writing primary on half of it and then excess layers on the other half. And as Eric already mentioned, our group started in about 2012. We can advance to the next slide. Thank you. So here's today's agenda. We're going to kick off the presentation talking about the history of cyber insurance, how it came about. We'll then move into current claims trends and the threat landscape, which is always interesting as it's evolving and honestly kind of makes Eric and I, the cyber insurance nerds that we are, we really love like this line of insurance that we're in. It's really exciting and interesting. And then next, we'll break down the cyber coverage and discuss the nuances and how it's a little bit different than other lines of insurance and dive into the differences between first and third party coverage and what each insuring agreement is going to cover within the policy. And then we'll talk a little bit about additional coverages that can be added onto the policy through an endorsement. And then we'll switch gears to how we actually underwrite cyber insurance and how we look at it and the best practices that we're looking for our insured to have.
And we go to the next slide. So I'm going to touch on just the history and the evolution, the anthology of cyber insurance, if you will. Cyber has been around in some capacity since the late 1990s. I think it's first started developing out of previously existing technology and professional liability policies. So in the beginning, it was just some small coverages. Maybe they were sublimited and they were tacked onto existing policies. And some of these earliest cyber policies were limited to coverages just like privacy liability. Again, just tacked onto an existing insurance policy. And this is as more and more organizations started to build their online presence on the internet. And it was very interesting at first when it came to the underwriting of cyber, because some felt like cyber underwriting belonged with directors and officers underwriters. Some thought it belonged with the E&O underwriters, and people didn't really know where it should fall within a carrier's organization, because a lot of the exposures in cyber insurance were brand new to the insurance market. So these underwriting techniques, they had to kind of develop and grow from scratch, because these are exposures and coverages that just never existed previously. So fast forward to the early 2010s, cyber insurance started to become more of a mainstream insurance product that a lot of major P&C carriers started to provide. And especially as privacy breaches and data breaches started to pick up, organizations of all sizes that collect or store customer information in any capacity started to realize how important it is to have this sort of coverage. So especially in 2013 to 2015, that's when we had three really large news headlining data breaches. So Target, Home Depot, and Anthem. And ironically, for insurance carriers, it was three separate calendar years. But these breaches really drove the cyber insurance market and purchasing and started to kind of refine how the cyber product was underwritten. So back in that time, there was a large focus on data, privacy breaches, looking closely into things like how many sensitive records a company might have, how they're storing those records and protecting them. In 2020, the market took another turn. I refer to this time kind of jokingly as ransomware-geddon, because it kind of almost felt like the sky was falling in the cyber market. People really, really had to pivot, and a lot of cyber insurers actually had to stop quoting and providing coverage for cyber altogether because they were just hit with so many claims, and their books just weren't big enough yet to sustain those sort of losses. So, with this huge uptick in ransomware activity, we had to really kind of pivot and refine how we were underwriting to these exposures. So there was a much higher level of scrutiny that we had to go into. And I kind of feel like the cyber market and underwriters went from high school students to, in a very short span, graduating from undergrad, going to grad school, getting their master's, and just getting to such a higher level of technical expertise. Just because we had to underwrite to so many more categories of controls with so much more detail and depth. And yeah, we're going to get into a lot of. It was
a hard marketplace. So sorry to interrupt, Eric, but like if you're learning in school right now about soft and hard marketplaces, it was a really hard marketplace. And, you know, the first time in the 15 years that I've been working in insurance that I've experienced a hard market. So it was exciting, but it was also a very stressful time too, trying to manage the portfolio and really drill down on the controls. And also we're dealing with COVID during the time, being locked down. So as you can imagine, it was just a very strange time.
Yeah, definitely. And it was also like, I always feel like cyber is a lot more accelerated compared to other traditional insurance products and the rest of the market. So where a normal hard market might last for 2 or 3 years, I feel like ours lasted for just one. And
Mhm.
in a normal hard market, maybe rates are going up by 50%, but in cyber, they were going up by 150%. So everything is just super exaggerated in terms of the speed of the market cycles too, which is just something interesting and unique to cyber. But yeah, I guess that brings us to today, in 2023, 2024. So now we have roughly 200 carriers who provide cyber insurance, and the global cyber insurance market is about 13 billion in premiums.
And
And
now we're
we
back in the soft marketplace.
Yes, and we are back in a very, very soft market, saturated with lots of competitors who all want to write cyber, and yeah, the prices continue to go down. And yeah, we can go to the next slide, please.
So there are so many threats in this very digital world that we live in. So this slide is just kind of scratching the surface with the types of threats that businesses need to consider. So businesses have liability to their customers and consumers. Sometimes when we are working with our brokers, they will say something like, my retailer doesn't need cyber insurance because they're using a third party to process the payments of the credit cards they're receiving from their customers. So that payment processor has the liability, they're fine. But that isn't the case, because if there is some kind of breach or unauthorized access, that company can still be named in a lawsuit, because me as the customer, I'm sharing my credit card with that retailer. I don't know who that payment processor is, that business's vendor. It doesn't really matter. It doesn't skirt that liability. So they certainly have that liability to their customers and their key vendors and consumers. The regulatory piece that's listed, that's becoming increasingly complex as newer laws and regulations are being passed. We saw that the Securities Exchange Commission, the SEC, passed in September of 2023 regulations for public companies to disclose a cyber incident within 4 business days in the 8Ks that they have to file with the SEC. So that's an example. If they don't comply with that requirement, they could get fines and penalties. And actually, they did fine 4 companies for not accurately reporting those cyber incidents linked to the SolarWinds data breach back in 2019. Notification requirements, these vary from state to state greatly. So companies need to make sure that they have the right legal advice and response team in place to comply with each state. More and more states are passing comprehensive and strict regulations. So they need those resources, both internally and externally, to comply with the evolving requirements. Business interruption. So, the first industry that comes to mind for me is a manufacturer. If their business is shut down and their plants and factories can't function, they can't produce their product, so they have a potential to lose net income pretty immediately. So, not every company is going to have a business interruption exposure, but a manufacturer is a good example there. AI is obviously a very hot topic. We're still learning about the new and sophisticated ways that threat actors can use it for harm, but we have seen deep fakes. So where criminals use AI to produce fake images or replicate voices. And we saw a business in Hong Kong where a finance employee transferred $25 million because they were tricked and saw on their screen, they thought they were seeing the CFO of the company in a Zoom meeting like this, telling them to transfer the money, but it was actually a threat actor criminal that was pretending to be the CFO. So it's really frightening. And AI phishing in general is different because it's really personal. It can include references to a recent purchase you made or interest and interaction. So like I said, we're still kind of seeing what kind of claims we're going to see from AI, but it's very much on our minds. It's new, it's evolving. And there's more to come there. And then the last one for vendor supply chain exposure. A good example of this was the CrowdStrike incident that we saw in July of this year. So a lot of companies use CrowdStrike for endpoint protection and other services. So CrowdStrike made an update to their product, but they didn't test it beforehand. And so when they pushed that out, it impacted all of these different companies and industries where they got that terrible blue screen. And it impacted some companies more than others. Some were able to, recover or apply the fix that they rolled out pretty quickly. But there were some industries, like some airlines, that were really impacted and down for quite some time. And they suffered a business interruption claim as a result. So it just goes to show like those companies, like tech companies, especially, for example, that have so many different customers, if they're impacted, it could be a potential downstream impact to many, many different companies and industries. I think we can advance this one. I haven't been checking if there's any questions. I'm not sure if there are any in the chat.
This
Okay.
is a great place to pause and see if anyone has questions. If you have questions, please feel free to unmute yourself and ask, or you can click on the raise hand button. Any questions so far?
Yeah, we can also leave time at the end for questions. Oh, did somebody have a question?
Yeah, go for it.
Hello, Eric and Caitlin. Thanks for having us. I actually wanted to ask about, you've mentioned about like the evolving cyber attacks or cyber threats that have been coming around. How have you seen that to be something that is, or how has that impacted you as an organization that's continuing to tackle cyber insurance or cyber attacks? How have you leveraged your, say, AI or data into actually making sure that you're adjusting your policies around cyber threats around the industry?
Yeah, great question. I don't know, Caitlin, if you wanted to do you have a response or if you want me to.
I would say, we work closely with a consultant of ours, SRM, and we kind of lean on them to really provide us like help with some of the underwriting questions when we're considering a company who's developing AI. So we would have like a set of questions for them and how they're kind of, I guess, scraping data or dealing with like testing and the large language models. So we would work closely with them, but we actually did come out with an AI endorsement as well. So we are staying ahead of it. And it is going to be focused towards companies that are developing AI again. But I think it's, as far as like claims goes, it is still kind of an evolving area and it's going to be kind of more to come, more to see. But I think the copyright issue is definitely complex and yeah, we'll see how it evolves. I'm not sure what you want to add to that, Eric.
Yeah, no, you touched on a lot of things I was thinking about, but I would just say we work really closely with our claims team and stay in touch with them on a daily basis. So as, I don't know, hundreds of claims come in every month, we get to hear what the most recent trends are. If there is a deep fake, like the one that Caitlin referenced earlier, they're going to let us know. And these are things that we can keep in mind as we're providing different types of coverage or underwriting different sorts of accounts. So yeah, just staying in close contact and communication with our claims team is key.
Mm-hmm.
Yeah.
Awesome. Did that answer your question, Nancy?
Yes, it does. Yeah.
I know it was a little of a vague answer, but it's kind of a more to come thing.
Yeah. I know it's a quite complex area that's quite still being explored, and I know there's still a lot more to understand to it. So yeah, thank you.
Definitely. Yeah, and speaking of complex, I guess we can look at this really busy chart, kind of detailing how complicated cyber insurance can be. But yeah, this is just a tree of the different first and third party coverages in our policy form. Each box is a different sort of coverage that you would find spelled out in our form. So cyber insurance is definitely dynamic and complicated compared to a lot of other insurance products, just because of the pure volume of how many different types of coverages there are in a cyber policy. Yeah, many insurance products have only one or two insuring agreements total, like property or miscellaneous professional liability, that would have only one coverage. So one insuring agreement, one limit, one retention, and that's it. Whereas we have, you can count how many boxes there are here, but we have a lot. So another way that cyber is a little more complex than other insurance products is that a lot of insurance products provide only first party coverage or only third party coverage. And cyber provides both first and third party coverages. Um, so when it comes to first party coverages, these would be coverages for reimbursing the insured, who's the company purchasing the policy, for any sort of first party expenses that would arise out of a data breach, out of a privacy event. So you can think of, when it comes to first party, there's only two parties involved. That would be the insurance company, which would be AXA XL, and then the insured, the client, the one who's purchasing the policy. So yeah, if the insured had some sort of data breach and they had to notify 10,000 individuals that their information was breached, that costs a lot of money. And maybe they also have to provide some sort of credit monitoring services to those individuals. That's really going to rack up the bills. And this first party coverage would reimburse the insured for that sort of expense. So those are on the left side. And then if you look to the right, that's the third party coverages. These are also known as third party liability coverages. And these are coverages for financial loss to a third party that the insured is legally liable for. So the coverage is still for the insured, but it now involves three parties. So again, one, AXA XL, the insurance company; two, the insured who's purchasing the policy; and then three, a third party who suffered some sort of financial loss or damage because of the insured or because of the event that the insured had, and the insured is now legally liable. So this third party is likely suing the insured for this financial loss. So an example of a third-party coverage would be privacy liability. So if the insured fails to secure some sort of highly sensitive information of one of their clients and they have a data breach or a privacy breach, and the client, this third party, is now turning around and suing the insured. So yeah, this chart lists out most of the coverages that we include in our form. And I think if you click once on the slide, something should pop up. If I did it right. Okay. Yeah, I just wanted to share a picture. This is what our policy looks like, just to show you how many different limits and retentions and coverages there are in our policy. And then if you click again on the right, is just an example of a standard MPL policy. So there you can see there's one limit, one retention. So yeah, there's a lot to think about with cyber policies and cyber underwriting. And yeah, the MPL, the policy form is a little more straightforward because there's just one limit, but doesn't necessarily mean that MPL is easier or more simple to underwrite. It is also really a nuanced product to underwrite. So yeah, if we want to go to the next slide, I'll go into some more detail about first party coverages that you'd find in a standard cyber policy. And then Caitlin can speak more to third party coverages.
Yeah, we do have two questions actually.
Okay.
So, Kasioki, if you want to go ahead and ask your question, and then that way, I'll read Martin's question later. But go ahead, Kasioki.
Yes, thank you, Eric and Kathleen. Based on the previous slide that you just showed us, does it mean that you contract that party or external contractors to offer those different types of coverages, especially on the investigation follow-up side?
The question is, I'm sorry, could you repeat it?
Yeah, do you contract third-party contractors for offering those many cyber risk coverages, especially on the investigation IT stuff? Yeah.
Yeah. So that's a great question. We have a vendor panel that we use for like forensics and PR and the crisis management side. So that's pretty standard for most cyber insurance companies to have a preferred panel vendor that they vet and have rates with. That would be the ones, and attorneys as well, that would respond in the situation of a claim. But that's a great question.
Yeah, we'll definitely get into more detail too on this slide. But yeah, our claims team, the second that an incident comes in, they're basically setting the insured up with any sort of company or vendor that they might need for that specific situation to just get the right boots on the ground immediately and to navigate the incident. And hopefully make the incident less costly for everyone at the end of the day. Because yeah, our claims team, they work with like the best of the best vendors in the industry. We have really strong, like negotiated and discounted rates as well with these vendors. So there's
Yeah.
lots of benefits to working close with your
As
carrier.
you can imagine, like with the influx of all the claims, there's so many different vendors out there for cyber that say, hey, I'm an expert. I want to be hired to handle this claim now, right? So it's definitely a competitive place from the vendor perspective as well.
Fantastic question. So we do also have a question from Martin Boyer, and Martin is asking, how do you assess the level of risk of policyholders who know essentially nothing about how to prevent cyber attacks? And how do you offer help in implementing cyber protection to these policyholders?
Yeah. So I think maybe some of the clients that Caitlin and I are used to working with, because we're on the large accounts team, they are much more sophisticated, but that doesn't mean that we're not open to partnering with organizations who are a lot smaller or maybe not as sophisticated. But we do offer a lot of proactive complementary services to our insureds. We can get them on the phone with the consultant that Caitlin mentioned earlier, SRM, to kind of walk through any area of cybersecurity for an hour. And we would cover the cost of that. So that would be free. So there's a lot of different things that we can consider offering to our insureds. And we do kind of play a consulting role in a sense with a lot of our insureds, giving suggestions on certain areas of weakness or areas that they can improve.
I would add too, I think like as an underwriter, if you are looking at smaller businesses and larger businesses, you kind of have to understand those smaller businesses don't have the same budget, right? They don't have the same resources to purchase all of these fancy tools to protect their network. And a lot of times it really does come down to the basics of, are you educating your employees? Because employees are like the number one source to make mistakes and to kind of cause the cyber incident, clicking on phishing links and emails and whatnot. So it's education is really, really important no matter the size of the business. And we really hone in on that when we're looking at small companies and even the large companies that Eric and I work on.
Fantastic. Great answers. Thank you.
Yeah, thanks for questions. So yeah, I'm going to dive a little bit more into the first party coverages that you can expect to find in a cyber policy. So here's 4 of the main insurance agreements that you could look for. And again, a first party coverage would be one that covers the insured's own costs resulting from some sort of cyber incident. So data breach, a hack, privacy incident, ransomware event, etc. So the first is data breach response and crisis management. So you can think of this as any costs that a company incurs to investigate or respond to a data breach. So hiring the privacy attorney, hiring the forensics firm, notifying those individuals whose info was breached, like I mentioned earlier, and providing credit monitoring to them, those sorts of things. The second one, which has come into the spotlight a lot more over the past couple of years, is cyber extortion and ransomware. So this coverage could include reimbursing the insured for expenses like the actual ransom that they have paid to a hacker or a threat actor. If they decided that it was in their best interest to pay the hacker to prevent or stop this sort of cyber threat, that would be reimbursed under this insuring agreement. And again, any related costs charged by these vendors or breach response providers to conduct the investigation. And a lot of times our claims team in these ransomware situations, they'll connect the insured with an expert negotiation firm who can jump right onto the dark web and kind of instant message and chat back and forth with the threat actor to get the ransom demand down, get more information from them. And yeah, our claims team is just great with getting the insured set up with whoever they would need in that moment. So if it's a ransomware scenario and the threat actor is demanding Bitcoin and the insured doesn't have Bitcoin, our claims team will get them set up with somebody who has a Bitcoin wallet ready to go if they determine that they need to pay that ransom. So the third one is data recovery. So this would be costs to restore or replace any damaged electronic data. So if any data is corrupted or destroyed because of some sort of cyber event, this would cover those costs to restore and replace that data. And then last, not least, loss of business income and extra expenses. This is the business interruption piece. Caitlin mentioned it earlier, but it's become a really big one for us, especially related to ransomware. Because basically any lost business income that the insured incurs because of some sort of breach or cyber event, that's going to be covered under this insuring agreement. So if you think of that manufacturer example that Caitlin gave earlier, where their entire manufacturing plants and facilities are all unable to operate because they had a cyber event, they're unable to generate their product, so they're instantly losing income. This coverage would reimburse them for that. And we wanted to give you a real claims example from one of our own insureds. So this one is a ransomware event that a global retailer had, I think it was a year ago. And so we paid a full 10 mil limit loss on this claim. But this client in particular, they had retail locations all around the globe, and they had a ransomware event that brought down their entire network. So all of their operations. So think of any systems that might manage inventory or pricing, shipping. They were essentially unable to make any sales, fulfill any sales, and just operate at all. So after they evaluated the situation, the different options, it made the most sense to pay the ransom to the threat actor so that they could hopefully restore more quickly and kind of prevent this business interruption loss from getting even bigger. So to kind of apply this claim to the insuring agreements that I just went over, the first party coverage that was triggered would be the most obvious, the cyber extortion and ransomware insuring agreement. So that would be the cost of the actual ransom payment, the cost of this expert negotiator who was negotiating with the threat actor, and any other related expenses. Second is that business interruption. So the lost income as this company was just totally unable to operate and make sales. And then the third being the data breach response and crisis management. So the forensics investigation, the cost to hire these attorneys, and any other sort of breach response expenses and providers. And we can move on to the next slide.
So next we'll talk about third parties. So the third party financial loss and the insurance liability associated with that. So the security and privacy liability, that would be the insurance failure to protect that PII, that personally identifiable information, or PHI, for example, personal health information. So if the insurance, a hospital, for example, and there's a breach and all of this PHI is compromised, and this insuring agreement would likely come into play, right? Because there could be lawsuits saying you didn't protect my information as the patient of the hospital. The regulatory side would be if there is some kind of fine or penalty associated with them not complying with a law or regulation, and it would usually be by like a governmental or regulatory body. Media is copyright infringement, libel, slander, defamation, or allegations of infringement of right of privacy for those digital media forms or traditional media forms. So think public speaking, newspapers, print publications, but it can also be the insured's website. And most companies nowadays do have a website. So any content that could be like plagiarizing or copyright infringement on their website, as well as social media. A lot of companies now have social media accounts, blogs, and podcasts as well. So we'd like to really check that basically they have an attorney on staff that's checking content before it's posted on a website, for example, or social media, just to make sure they're not infringing upon another party's rights. Technology errors and omissions. So this is going to be applicable only for certain kinds of companies because this is for errors and omissions in tech products and services. So basically, if you have like a company that's providing a cloud service or a software as a service provider, a SaaS provider, they would likely purchase this insuring agreement to protect themselves if something goes wrong, with their product or their service that they're providing to their customer. But, a company like a restaurant, of course, doesn't have a tech E&O exposure, so that insuring agreement would not be applicable to them. So that's strictly for the tech companies. And then there's a couple of claims examples. Again, these are from our book of business. So the first one is a media one. So basically, a company didn't receive the right permissions that they needed to use different photos, and there was a complaint for copyright infringement, and the damages ended up being $5 million because they didn't get the consent that they needed. And then the second one is what we call a BIPA claim. So this company had a technology, including a tool, which was probably an app, I'm thinking, that had facial recognition. And under the Illinois Biometric Information Act, you have to receive consent before that biometric information is collected. So this company didn't get the right consent that they needed, and so that they were fined, and the settlement was $3.5 million. We can go on to the next slide, please.
Caitlin, I was wondering, with the time that we have, the next slide is just kind of detailing some additional coverages, but I feel like it might be of interest to go more into like how we underwrite and what the process looks like.
So maybe, no, that's a good idea.
Yeah, maybe we could like skip this one. If we have time, we can come back to it. Or if anybody
has realize we were going to be so chatty, I guess.
Yeah. Yeah.
So I can jump right into this. So how do we underwrite cyber insurance? So typically we do receive an application and a ransomware supplemental to go around, along with it. And the ransomware supplemental really came about after 2020, when we had the influx of claims and we started drilling down on the controls and looking very closely. So for larger, more complex insureds, the ones that Eric and I work on, typically we do have an underwriting meeting. So the broker that represents the client or the insured will host a meeting, and we'll have an opportunity to talk to the CISO, the Chief Information Security Officer of the company, and ask any questions that were not addressed in the application. And honestly, it's one of my favorite parts of the job. I think it's super interesting because each client is so different and you can really learn so much from these meetings. So basically it's to fill in any gaps that of information you don't receive on the application. So it could be, there's nothing about the insurance vendor management program. I really want to understand how they're vetting the third parties they work with and making sure that they have good controls in place so that there isn't a third party incident that impacts them. Or another example could be, I just want to understand how often you're meeting with the board of directors and what kind of security posture or tone you're setting with the company from the top up, because again, that like education piece and just informing your workforce is so important. So I just really like to hear what those top executives are doing and their involvement with the board and how they're setting that tone. So I think you can really understand like the level of sophistication that these clients have in their security programs from these meetings. I think we can move on to the next slide now. Thank you.
Yeah, so how cyber is underwritten. We definitely wanted to give you guys an overview of that if this is something that you might be interested in doing one day. So the first thing that we look at when we're underwriting is the insured's exposures. So the most telling feature of an insured would be the industry that they operate in, so their class of business. Because obviously, depending on the industry that they're in, there's very different risks involved. So a healthcare organization, for example, will have sensitive personal health information on their patients, which has especially lately been a big target for hackers. And on the other hand, a manufacturer, they might not have that big of a privacy exposure because they're not really storing any sensitive information on customers or individuals. But then if you think about the business interruption exposure, manufacturers have a very large business interruption exposure. So if their operational technology is compromised, they're immediately losing money because they're unable to produce their products. The exposure unit that we use in cyber to rate in our rater is revenues. That's our rating basis. So Revenue size is also a pretty good starting point in determining the price, the limit, the retention that we want to put the policy at if we decide to write the policy for the risk. And record count, we mentioned earlier, is also pretty important. Just knowing how many records an insured might have, where they're stored, how they're protected. And in the worst case scenario, essentially, how many individuals would be impacted if there was a really bad data breach or a privacy breach. And then we would look into the insured's controls. So basically, how is the insured managing their cybersecurity overall? What does their cybersecurity hygiene look like, their maturity? So we consider a lot of things here. One of the first things we look at would be how large their security team is. So depending on the size of the organization, we're obviously going to look for different levels of sophistication and different sizes of teams, but we're also going to look to see if they're outsourcing any functions to third parties. That's a lot more common for smaller organizations. And if they are outsourcing a lot of their IT functions, we want to make sure they're staying pretty closely aligned, making sure that things are being handled in a secure way in line with all their other security procedures. So what we're hoping to not see would be they take maybe the set it and forget it mentality. They outsource these functions to another company. So some people might think, okay, this is not my problem anymore. It's not my responsibility. But really, they should be staying in close contact to make sure nothing's getting missed and things are going smoothly. Next one, a lot of people say an organization is only as strong as its employees, and hackers definitely notice that everyday employees can be a big weak point as phishing emails, social engineering, these are tactics that they're often using to get into a company's network. So we definitely like to make sure that companies are keeping their employees aware of this. And they can do that through mandatory trainings on how to detect when an email might be suspicious. We also look for companies to conduct phishing exercises. So they'll send out fake, suspicious looking email to their employees to see if anybody gets tricked into clicking on a link or if they're able to successfully detect this phishing attempt and report it. And just a quick funny story that I like to share when I talk about phishing, just to show phishing can happen to anyone. But a few years back, one of my colleagues who's no longer with the company, really great guy, he was doing insurance for over 20 years. And it was a Friday afternoon in the office, and he stands up and he's like, everyone, this is really important. HR just sent out this email. If we don't click this link and update our info, we will not get our paychecks next week. And everyone, so please make sure you click this link before you head out. And at first, I thought like he must be joking, that maybe he's just trying to like joke around with us or trick us. But he was genuinely tricked by this email. It was a phishing attempt by our company, and he had a follow-up training afterwards, and he learned his lesson. But it just shows that even a cyber insurance underwriter who's been doing this for over 10 years, when they're tired on a Friday afternoon after a long week, you could be vulnerable. Anyone could be susceptible to this. And yeah, that story just cracked me up.
That's why I'm late doing all the trainings, by the way, because I'm afraid that it's a phishing link.
Yeah, right. Exactly. But yeah, so next thing we look at would be the loss history. So it's obviously important to see if an insured's had any sort of cyber event, breach, or claim in the past. And if they have had an event, it doesn't necessarily mean that the insured's a bad risk. In fact, sometimes like right after a claim could be one of the best times to write a risk because they've learned a really hard lesson and they kind of have their cybersecurity in order. But it's definitely important to see what the insured's weak point was. So how did the threat actor get into the environment? What lessons did the insured learn? What improvements they've made to prevent a similar incident in the future? So they got into a specific vulnerability that was exploited. Is that now patched? Or did they implement some sort of new protection in place to prevent this sort of attack again? Compliance is pretty straightforward, but because our policy covers regulatory fines and penalties, we just want to make sure that our insureds are compliant with all of these regulations like GDPR. For example, if they have a website, they're likely collecting cookies, and they would need to have a proper cookie banner on their website to comply with GDPR. And last but not least, backups is something that we look very closely at. In the event of a ransomware incident, we look for insureds to have offline copies of their backups. So these would be fully disconnected from their corporate network and fully disconnected from the internet. So that way, if ransomware were spreading through their environment, these offline copies, there would be no way that they could be affected by the ransomware. And if they do keep their backup copies online, then we would look to make sure that they're properly segmented from the network. Maybe they require MFA to access them, and only a limited number of individuals can access them. They also might authenticate to their backup solution outside of their everyday login in the Active Directory and use separate unique credentials to get to the backups. So this one's just important because if an insured is properly protecting their backups, then they might not even need to consider paying a ransom if there's a ransomware event, because they wouldn't need to get the decryption key back from the hacker, and they could just restore from backups and move on. So definitely an important one for us.
Yeah, and
And
we make sure we ask if they're testing them too, right?
Mhm.
So that's the next step. Like they may say, yeah, they're offline, we're good to go, but it really testing is such a big part, an important part of the resiliency piece, and also with like the incident response plans and the disaster recovery plans and business continuity plans. Just, are you testing these and actually putting them into practice? Sorry, I'm
no,
jumping
all
in.
good. I was going to say we could go to the next slide. So
Yeah, and we also have a question. Nancy has a question. Go ahead, Nancy.
Hey, so in regards to like you talked about ransomware. So when a company faces a cyber attack, I mean you've talked about having backups, you've talked about having that ability to get the systems up and running, like using that backup data that they had. But what about if the hacker actually has access to information that might inflict or that might impact the company later on? Do you just say, well, since we have a backup of the data, then you can move along? What do you do in such a case and actually making sure that your company is still not exposed during that type of cyber attack?
yeah, that's a really good and like relevant question for us right now. What we've been seeing from a claims trend perspective is that before, the hackers were focusing mainly on the backups, and they wanted to get to the backups because if they were able to infect the backups, then the insured had no choice but to pay the ransom. But I think a lot of organizations have learned their lesson and have kind of cleaned up their backup strategy. And so they have viable backups. So the hackers are really smart, and now they're kind of shifting and pivoting what they're targeting. So they are targeting really sensitive information. And so a lot of these ransomware groups are now just extorting companies for the sensitive data. So even though the backups weren't affected and the insured can continue operating, maybe the hacker's saying, we're going to release all of this really highly sensitive personal health information on your patients, and unless you pay us the ransom. And then they have to start to think what sort of lawsuits or class actions might come out of that if they don't pay the ransom. And so, yeah, kind of extortion without the ransomware encryption and the malware is a trend that we've been seeing over the past year.
And in terms of like actually getting a company to actually pay for that ransom, how do you determine, or at what point do you actually get the company to actually pay that ransom? Um, is there a way to, or are there some policies or procedures that you actually follow before you actually comply to what they're asking for?
I think that one's tricky, and it's really dependent like on the claim and the company working with that third party attorney and coming together and making that decision. I think it's really a case to case basis, because in some instances the ransom is paid and some instances they're not paying. So it really it depends. It's pretty complex.
Awesome.
I'll leave you
Awesome.
guys to go on. I have a lot of questions, but it's okay. You can go on.
It sounds
Absolutely.
like maybe you're interested in cyber underwriting.
I actually am. So
That's
Oh, that's
great.
awesome.
And I believe this is the last slide.
Yes, this one is so busy. I'm sorry. There's just so many different things that we look at. I think we had this as 2 slides initially, so sorry. It's like an eye test. We've already really talked about the education and training piece a lot. I don't want to, beat a dead horse here, but I will just point out one additional thing is like the role-based training, because we saw after one of the big casino events last year that the help desk specifically was targeted for an event. So a threat actor pretended to be an employee trying to reset their password. And that's how they were able to gain access to the network. So following that event, we were really asking the larger companies, are you conducting role-based training for IT, for the C-suite, for any kind of financial roles that have like access to really sensitive information in the network? Data protection and data classification, that's really kind of labeling your documents and emails. So at AXA XL, you know, when we were trying to send over this slide deck, actually, we had it labeled as internal initially, so we couldn't email it through. So we had to change the classification. So we have, that's an example of a great control we have at our company, but we would look for insureds to have this kind of, you know, classification procedures in place. Are they encrypting data at rest and in transit? Do they have DLP tools in place to help with data leakage? Email protection, you know, we're looking to see that, you know, there's SBF, DMARC, and DKIM, these terms that are authentication tools to help verify that emails came from the domain that they actually claim to be from. Endpoint protection, we talked a little bit about EDR already, so it's protecting those endpoints on the network. It's providing like a response tool, so the SOC, the Securities Operations Center, can look and see and work with, I guess I'm jumping now down to the SIEM, but work with the SIEM tool and the endpoint protection to see what kind of activity is happening across the network. It can be behavior-based too, so you can see is someone logging in from Russia, for example, that normally is logging in from New York, so that's unusual. This is an anomaly. Do we need to look into this and see if something malicious is happening? Access management, MFA, is something that was really big during like the influx of ransomware claims back in 2020. If a company did not have MFA in place, we were not giving the full limit for ransomware because it was such a big risk. So MFA is that additional factor. It's an additional security method that a user would have to access the network. So when I log on to the network for AXA XL from home, I'm using a VPN, and then on my work cell phone, I go to the app and it's telling me like to approve it, or another example would be a code or something. I think most of you know what MFA is at this point. So we're looking for MFA to be deployed across the board for remote access to email, and then privileged access management. So that means like those privileged accounts that have access to the most sensitive things on the network and higher, I guess I don't want to use the word privilege again. They can escalate higher privileges. They can escalate things on the network. We want to make sure those specific accounts have MFA in front of them. And then vulnerability management and patching. So the patching, that there's a regular patching schedule in place, and patches are a set of changes that are made to a computer program or its data that basically fix bugs that like Windows or whoever, Microsoft, is going to push out. So we want to make sure that companies are deploying those patches and making sure that their systems are up to date. And Eric, I'm going to turn it over to you since I'm coughing.
Oh, no, all good. Yeah, I think we touched on a lot of the remaining bullets. I guess one that I'll just touch on, because I think it's so important, is the network management and network segmentation. This is just something that we're looking at more and more, just to see how the insurance network is set up as a whole. So what their footprint looks like, what sorts of systems are involved, are there payment systems, is there OT in the environment, the operational technology piece. So we always look for some sort of network segmentation across the insurance environment. We would look for segmentation geographically, segmentation between physical sites and locations, segmentation by business unit, and a bunch of other areas. And one area that's particularly important is for manufacturers. So, for example, we would look for their OT or operational technology network to be fully segmented from their IT network. So this OT network would house like their industrial control systems, data network, and kind of the machinery and systems that they use to manufacture their products. So yeah, we would look for segmentation between the IT network and the OT network. We want the OT network segmented from the internet. And basically, segmentation is so important because it can kind of prevent any potential spread of malware or prevent lateral movement of a threat actor. So if a hacker does get into a company's network, we want to make sure that they're not able to pivot laterally, move around, or gain access to any other important areas of the network. But yeah, I guess we can go to the last slide. I know we're a couple minutes over, but yeah, we really appreciate your time and interest. They were great questions and love the participation.
Absolutely. And we do have a handful of more questions. So I wanted to, just check in with you, Caitlin, Eric, if you guys are good on time, if you have a couple extra minutes to stay on and answer some of these questions.
Absolutely.
Okay, perfect. So we have I see on my screen Vanessa, Chantal, Kasioki with their hands up with questions. So go for it.
I can start. Thanks again so much for coming, Caitlin and Eric. This has been a great discussion. I wanted to ask if you could speak a little bit to how cyber is related to more traditional coverages and if there's any overlap. So the biggest one I think of is with traditional business interruption. And how does that mesh together? And in the industry more broadly, how do you determine if cyber is something that's added in, included, and kind of already covered by the main policy? Or how do you know when this is like a big standalone critical piece of a company's risk management plan? In a nutshell, briefly.
No, I think there is a hot button term called silent cyber that brokers especially, but the whole industry is constantly thinking about, where there might be quiet cyber exposures in a policy that are or are not covered and where these sorts of things should fall. I think at least within cyber insurance in our policy form, we try to be very clear about when it comes to business interruption, what sorts of scenarios that we're looking to cover. So usually it has to be tied to some sort of privacy or network security event. So some sort of unauthorized access, or some sort of hacker or malware or something like that. I think where the lines get a little more murky is when it comes to kind of property damage. I know that we fully exclude property damage and bodily injury in our form, but I think right now the market's trying to figure out where they can find coverage for contingent bodily injury and property damage just arising out of cyber. I think some other markets are starting to toy around with offering this sort of coverage. We feel like this is something that should not be covered under our cyber policy, but the market's always changing. So I guess we'll see in a year from now where the market's at.
Yeah, and I would say the other one that comes to mind is like, which we didn't get into the coverage extensions, this cyber crime. So there's like monoline crime policies in the marketplace, and we do offer a supplement for cyber crimes, so social engineering, theft of funds. So sometimes there's an overlap there when there's a claim and like both policies are involved. But really, like if they're the monoline crime carrier, the idea is they would respond and then we would be excess over that. I think more and more brokers kind of try and push us to write higher limits for that, but that's the other one that comes to mind. But a lot of policies would have like a cyber exclusion as well for other lines of coverage because they're not looking to pick up the nuance, the coverage that we're providing.
Great answer. Thank you both.
Awesome. Next up, I see Chantal. Go for it.
Hello, everyone. Thank you so much for this session. I hope you can hear me. I was having a bit of a cold, but pushing on. And I wanted to know, have two questions in mind. I know you highlighted like industry class. I wanted to know which industry have you found like the most complex in terms of underwriting these policies, and also within career growth. I do know most typical underwriting companies do have like they could categorize them like in excess, surplus, or maybe health. So I can't think of the categories, but I just wanted to know like career growth wise as a cyber insurer, do you specialize in specific industries? Like you say, okay, I'm going to always constantly work in this industry, whichever companies are based in that, or is it just general, whatever comes on the table?
Yeah,
Yeah.
we write a little bit of everything. So all different industries. And as far as like difficult classes, I would say healthcare for sure. It is a more difficult one to underwrite. And we're seeing like professional services is still number one for the number of claims that we're receiving. So think like law firms, just because of, the type of business that they're in and maybe how hurried they can be, right, with getting things done. Maybe the controls are not as strong there. I don't know if you have anything to add, Eric.
Yeah, I was just gonna say manufacturing, I think is pretty complicated. I know I talked a bit about it earlier, but yeah, manufacturing has a very specific type of network and systems that's very different from a lot of other industries. And so I know in 2020, when ransomware started blowing up, I knew very little about operational technology and industrial control systems, but we had to really figure out how to dig into that risk and understand it in order to get comfortable with covering it. So that's one where I would say it's definitely a little more complicated. And then just career growth wise in general, I I can say I think cyber has so much career potential and opportunity for everyone. I mean, cyber is so new that a lot of people in the insurance industry, maybe they've been in the industry for 20 years, they are a little bit intimidated by cyber because it's something that they know little about and they don't really feel the urge to kind of jump in. And so I know when I started in D&O underwriting and I couldn't find anybody on my team to help me with the cyber work because they're like, oh, I don't know anything about that. I'm not going to touch that. And so that's kind of how I got into cyber because my brokers were sending me the business and I started talking to the cyber manager in my office. But I feel like there's in insurance in general, there's so much career opportunity, but especially in cyber. Everyone's looking for a smart underwriter who's just driven and willing to kind of learn and adapt as I mean, the cyber market changes every year. We're asking different questions every year. So yeah, if you're up for the challenge, I think there's a lot of opportunity.
Great questions. Next, I see Kasioki and then Nancy. And I saw a couple questions in the chat box. So Pearl, you can go after that. Go ahead, Kasioki.
Yeah, thank you so much. I hope you can hear me clearly. Yes, I had two questions actually. Last month we spent a couple of hours at your AXA XL New York offices, and it was really amazing to learn more about AXA XL and about cyber. Is there a specific course for a student like me who can go, like try to know more about cyber risks as the IT staff uh, before coming or joining the industry?
Yeah, that's a good question. I'm sure there are some courses out there, but I would have to think about it. I think
Yeah.
one thing that you definitely can do is I find that I get a lot of my information from LinkedIn. I feel like if you're connected with people who are in the cyber market, they're sharing kind of news articles or just articles written by insurers or brokers. And it's just constantly like my feed is just showing me what the most recent trends are in cyber. And so I feel like that's a really good way to just get some up-to-date information and just know what's going on like this week in cyber insurance.
Yeah, I was going to suggest the same thing with LinkedIn. There's probably some courses on there, I think.
Thank you.
Great question. So next, I think we have Nancy and then Pearl.
My question was actually right what Cassiope asked, so
Oh, perfect. There
it's
you
okay.
go. Perfect. All you, Pearl.
Okay, thank you for such an insightful presentation. I just had a question along these lines. Are there instances where like potential clients have been denied cyber insurance coverage? And I just wanted to know like what constitutes such a decision.
Yeah. Let me think of an example. There's definitely instances where claims are denied. So I think one example would be maybe a company had an incident and they were very aware that there's a hacker in their network, something's going on, but they didn't report the incident to us or their cyber insurance carrier right away. Maybe they waited 4 or 5 months and they thought, oh, we fixed it, we think everything's fine, but then things went sideways and they were kind of really hurting. If they then submit the claim like 4 or 5 months later, then it's very likely that the insurance company is not going to cover that claim because there's a lot of conditions and stipulations in terms of reporting and notice requirements in our policy. We want the insureds to notify us as soon as they know anything so that we can help them figure out the situation right away. But if it's something where they were aware of it, but then they sat on it for 5 months, that's a totally different situation. And I think most cyber insurance policies would exclude or deny that sort of claim.
Right, but I think I asked about like coverage, getting
Yeah,
the coverage
I
in
think
general.
Oh, okay.
I think I don't know if I'm understanding the question correctly, but I was going to say if, for example, a company doesn't have multi-factor authentication in place at all, like that might be a reason for AXA XL to say, unfortunately, we can't give you a full cyber policy because that is such a crucial control that we look for. And I think that's pretty much like the number one reason why we would like decline to provide a quote to a company. Is that what you were asking?
Yeah, that's
Okay, all right.
Not sure.
You would agree with that, Eric, right? Because I mean, that's really a deal breaker, I would say.
100%.
Yeah.
Yeah, if they're lacking really crucial controls, like if they have remote access exposed to the internet and they don't use MFA, that would be like an automatic decline for us because we definitely think controls are the most important. We're underwriting to a pretty deep level, I would say, compared to a lot of our competitors.
All
Sorry, I
right.
misinterpreted the question.
No. And also important to say, like, that's our perspective too. There may be insurance companies out there willing to do it without MFA. That's just an AXA XL, underwriting stance. There, like we said, there are so many cyber insurance carriers, so some might be more relaxed about it and say, okay, no problem, here's a quote. So just want to make sure you understand that too.
All right. Thank you.
Yeah.
Great question. And Elizabeth also has her hand up. Go for it.
Thank you so much for the very interesting presentation. I have a question regarding the very contagious nature of cyber risks, so in particular about the value chain. So how do you deal with the risk associated that there are many different companies involved in one cyber incident?
Yeah, no, that's a great question. That's like really top of mind as well with a lot of these big just supply chain attacks. Hackers are definitely realizing how important it is and how easy it is to kind of mess up someone's day if they attack the right piece of the supply chain. But I would say, as underwriters, we're just looking to make sure that our insureds have vendor management programs or third-party risk management programs in place. So that would include things like having a full inventory of all of their most critical third parties and vendors that they work with, ranking the criticality and risk of these third parties, and conducting assessments of these third parties. Maybe they're reviewing their documents and policies and procedures, or maybe they're doing a questionnaire. But making sure that they're really just identifying, tracking all of these security risks associated with their third parties. That's what we can do from an underwriting perspective, I would say.
Yeah. And the contract piece too, like how the contracts come into play between that vendor and their customers. We may not always get a copy of a contract and understand the liability. It would be unusual if we did get a contract for every single cyber submission. However, I think just making the customer, the insured, aware of that, right? So that they're not surprised if in a situation they're realizing, oh, I have the liability here, like this party didn't. So just that they have that understanding and the right legal people involved when they're contracting with these vendors. It's really complicated and something we definitely think about and worry about.
Thank you. Do you actually handle
the large scale incidents differently from a single cyber incident, so to say?
You said, do we
Handle them differently. I mean, I know the claims team, they have like trackers for all of these big incidents. We have spreadsheets of all the insureds impacted by each one, like Move It and, you know, CrowdStrike, all of them. So I don't know the nuances of how, Eric, I don't know if you know the nuances of like the actual claims handling, if it's any different.
No, I think if we write these risks and they're all impacted, we have to pay and handle the claims, each claim as it comes in. But I guess as like a team, we can really try to pay attention to any sort of aggregation risk. So if a lot of our insureds are relying on the same provider, that's something that we're going to try to start looking more into, especially next year after the CrowdStrike incident, for example. Being able to track that sort of information in one spot so that we know.
Some of our competitors will schedule the cloud providers and provide a full limit for the scheduled cloud providers and then a sublimit for ones that would not be scheduled. However, that idea, although it is very smart, it hasn't really taken off with the industry with all of us doing that. So, you know, they end up really kind of providing the full limit for everyone, to be honest with you.
Great question. Yes. And Elizabeth, I'm curious, are you dialing in from Germany? I know you're based
I
in
do actually.
Germany.
So it's dinner time, and I thought, well, maybe it's a good idea
Oh,
to have some.
fantastic.
Well,
It's
enjoy
very
the rest of your dinner. Thanks for the question.
Right. Thank you for dialing in all the way from Germany. That's incredible. So I do see another question from Chantal. Go for it.
Right, please. I know about time, but I just wanted to know, are there designations expected of cyber insurance underwriters? Like I know most people do CPCU for the other typical industries, or some have ARM. I wanted to know if this industry also has specific professional certificates you need to get.
Yeah, so I would say like there's none that you would need or that would be expected for cyber underwriters. I think CPCU is like in general the most for any sort of property and casualty underwriting, that's kind of like the top tier designation that you could get. But when it comes to cyber, there's nothing really specific out there. But I know at AXA XL, we're doing a lot with learning and development. So we're starting to partner with some true like cybersecurity vendors who can help you get designations like IAPP or for some of the more advanced colleagues, even the CISSP. But that really is kind of over and above and beyond what you would expect for somebody who's getting into cyber underwriting.
Thank you. Thank you.
Fantastic. Well, it looks like we can wrap the session up. Thank you, Caitlin, Eric, again for this amazing session and for hanging out with us for almost an hour and a half. I definitely should have scheduled this session longer, but I absolutely appreciate all of the questions and the engagement from the students that are here with us today. So that absolutely shows that this is definitely an area of interest, right, for a lot of the students. So for all of the students that are here with us today, as mentioned, we do host these sessions on a monthly basis in the fall and spring semester, but we're skipping December and January because I know you all have winter breaks and whatnot. So we're going to pick up our sessions again in February. It's the second Thursday of every month, so it's going to be February 13th from 1 to 2 Eastern. Our presenting company is going to be ICE, and we're going to learn all about parametric insurance, which is also a relatively new concept that was introduced to our industry over the past few years. And there's been a lot of advances in technology and things like that. So it's definitely taking our industry by storm, no pun intended. So join us for what is going to be a very informative and interactive session in February. And yeah, with that, I wish you all happy holidays, happy Thanksgiving if you celebrate, happy New Year if I don't see you before February. And please feel free to keep in touch. Hopefully you all had a chance to click through all of the links that people provided in the chat box so that we can all connect through LinkedIn. And yeah, Caitlin and Eric, thank you again for your time. Enjoy the rest of
Thank
your
you.
day.
Thank you
Yeah,
for
thanks,
having
guys.
us.
Thanks for having